G'day, folks, one and all. Greg Soldman, CIOs here for Come Learn With Me, another article in the Come Learn With Me series. I've got the beautiful Glenfinnan, Scotland, Glenfinnan behind me. Hey, lad, timber down. Okay. Well, what do you know? One of the articles that you all like this week, I love that word, y'all, comes nonetheless from the blockchain Bitcoin space. So let's see if we can pick up some new information and learn as we go. Bitcoin rally attracts wave of private investments as leading blockchain VC raises new $120 million fund. Okay, so let's highlight that. That's an interesting point. We'll keep some notes and put them in at the end of the article. By Lawrence Wintermeyer. This is from Forbes. He covers fintech, digital assets, and sustainable investments. The Bitcoin rally has seen the cryptocurrency climb to uncharted highs, and this hasn't just been reflected in the markets. Away from exchanges and OTC desks setting the price of BTC Bitcoin, private and institutional investors' interest is growing at a pace. Evidence of this can be seen in the growth of crypto venture capital funds, which have raised billions of dollars in 2020. I remember 2018, they were also around, they went bust. So let's see. On December 23rd, Seoul-based blockchain investment group Hashed revealed that it raised $120 million for its first crypto fund, the firm led by CEO Simon Kim. Let's just get it all in. For posterity, in case we ever want to refer to that, we'll come back to this guy. Intensive investment in disruptive blockchain startups, including base layer protocols similar to Ethereum. Okay, we know what that is. According to Kim, the next wave of crypto networks will mark the start of the protocol economy, an era in which data and value is transmitted globally by crypto networks using a shared public ledger. Yeah, I think that's a big enough dream. I think that's true. We predict strong government and institutional support for this new paradigm, and it's had no trouble selling out to group's first VC fund. Investors circle blockchain startups. Accredited investors, that's us, are limited in terms of the crypto assets they can trade. No, it's not us. Primarily consisting of Bitcoin and Ethereum via regulated brokers and custodians blockchain fund, provide an alternative way of gaining exposure to digital assets and the ecosystem they support. As Bitcoin's broken new records, surging past 22,000. Okay, so this is, I think this was a mid-December article, early December maybe. Some investors are looking beyond the 12-year cryptocurrency to bootstrap in the next wave of blockchain networks. Glenfinnan. Data from research group The Block shows a record $900 million was invested in blockchain startups in Q3. Investors rushed to bootstrap decentralized finance projects, in particular including those focused on portfolio management, lending, and derivatives. Okay, that's kind of interesting to me. I used to be in that game. Okay, private investors fund public networks. No one knows where Bitcoin creator Satoshi Nakamoto originated. Speculation placing him everywhere from London to LA. Okay. What can be said is that the movement he started founded on blockchain technology is a borderless industry that's attracting major investment around the globe. In the US, and Andreessen Horowitz subsidiary A16Z was founded to seek out promising crypto startups alongside firms like Pantera Capital. I know Pantera. Our private client group has featured some materials from them. And Galaxy Digital, led by veteran Mike Novogratz. He's a smart chap. In Asia, meanwhile, Hashed is not alone in securing private investments to fund public blockchain networks. A number of cryptocurrency exchanges, including Binance and BitMax, have their own VC arms. Okay, that's interesting. Task with let's capture that as a point. Tasked with nurturing next-generation crypto companies, a symbiotic relationship of the same exchange listening, the native token of the projects they've incubated once they reach maturity. Right, that's what tokens is. In our private client group, we did feature a very interesting digital assets fund called ARCA, A-R-C-A. You should check it out. It's not just VCs that have sought exposure to blockchain either. Family offices and hedge funds, other things interesting space. Yes, they have. Harvard University's investment arm is winding down a fund has really jumped into the crypto market. Two other investors in an $11.5 million investment in crypto company, Blockstack. Okay, that's interesting. Yale University is also known to have made significant cryptocurrency. See, Intel. Okay. The institutional case for crypto. Bitcoin is going to Come on. Bitcoin is going through the early stages of a new asset class, from suffering early bubbles to attracting scammers with their get-rich-quick schemes. The frothiness of the market has been tempered by a robust product that caters to a professional audience. Crypto is significantly more mature now than in 2017, when Bitcoin last approached the highs. It is now trading at. I think last time it hit 20,000 on the button before it nosedived. Today, the industry supports a healthy futures market while enhancing option and custody. Have all anchored Bitcoin while making it palatable to institutional investors. Correct. In London, Musk's reputation, which has largely consisted of tweeting crypto memes to his 41 million followers, hints at a deeper interest in the digital currency. He would be perfectly qualified to lead such a thing. In a typically Muskian exchange on the territory of the Tesla CEO was encouraged by MicroStrategy's Michael Saylor. We know Michael Saylor put all of his balance sheet into Bitcoin or crypto to follow his lead and convert the same of Tesla's cash reserves to Bitcoin. There you go. Are such large transactions even possible? Pardon much. Which Bitcoin Saylor replied in the affirmative. Okay. So the size of transaction, looking at bigger transactions, that's a very interesting point, I think. Do we ever highlight it? There you go. There you go. Infinite. Bitcoin's low correlation to traditional assets has compelled some investors to rebalance portfolios that were heavy on bonds and equities, allocating a tranche to Bitcoin and not much. Bolder investors, however, are looking beyond Bitcoin to the possibility of affording by new blockchain protocols where the risk reward is higher, but so is the potential for outsized returns. Right, correct. So we looked at gaming tokens, utility tokens. It's a whole ecosystem. Corporations catch the crypto bug. While institutional investors have been buying Bitcoin and investing in the industry, small to rounded companies have been trailing their own blockchain solutions. Has shared as publicly supported KKR, responsible for developing the country's Platinum blockchain and Lion blockchain, owned by Tokyo's LVC Corporation. Big Four accountancy firm KPMG meanwhile is expanding its blockchain strategy, supporting Microsoft Tomia and R3 in developing a solution for 5G network. Okay, that's interesting. And filling its own blockchain patent. So obviously, blockchain and accountants, of which I am one, a CPA, go hand in glove. Security of information or verifiability of information. Against this backdrop of corporations investing in private investments and blockchain VCs have seen crypto funds fill up fast. The digital gold rush has prompted a booming business in picks and shovels and tools and apps for interacting with the next wave of decentralized protocols. Okay, now there you go. Very interesting. Thank you, Lawrence Wintermeyer. And here are the bullet points for the article, which I've now got, and we'll summarize and put at the bottom here, in case you don't want to watch this. We want a quick reminder of what we learned. Thanks for tuning in. See you later.